Welcome back to The Price of Business. I'm your host, Chris Kelso. Having a great time this morning, and we're bringing back one of our great guests that we always like to have on the show to talk about insurance and anything in between. We have the great Tim Oneil with State Farm Insurance. Tim, how you doing, buddy?
Very well, and good morning, sir. How are you?
Oh, we're doing very well. Just hanging in here, doing all the great stuff over at The Price of Business. And, you know, you and I have a great conversation we always talk about, whether it be about flood insurance, whether it be about the importance to maintain insurance on yourself, whether it be about insurance on your property, whether it be about insurance for disability. But today, we're going to talk about something that happened to me personally and that you told me about, and I had no idea. So before we do that, introduce to the world a little bit about who you are and what you do.
Yes, sir. Well, I'm Tim Oneil. I'm a State Farm agent here in Houston. Almost coming up on 25 years with State Farm, as a matter of fact. 8 years as a claims adjuster and the rest of it as an agent. So I'm a lifer.
You're a lifer. And as you tell me all the time, there is State Farm and then there is everybody else.
That is right.
Well, that is great. Well, you know, one of the things that and I tell everybody, for the purpose of full disclosure, you are also my co-host on the Real Estate Rat Pack radio show, where we have a really good time every Saturday morning at 9 a.m., but you're also a great insurance guy, and when I recently got into a collision, through no fault of my own, by the way, you talked to me about some of the things sometimes that are hidden in policies that I was able to access to, mainly about a diminishing value of my vehicle. But let's talk about the importance, first and foremost, about auto insurance and what it's about, how it protects you, the different types that exist as far as if you have your car paid free and clear. Is it important to carry one type versus the other? Let's talk first a little bit about that, and then some of the things that can arise if, unfortunately, you get into an accident, and we're in a very big city here in Houston.
Well, auto insurance is pretty well standardized. I mean, as far as passenger cars and light trucks and everything that everybody's going to have in their driveway, once it gets into commercial vehicles and different things, it's a little bit different. But we all have basically the same coverage. It's evolved over a long period of time through the market and court cases and everything else. So auto coverage is pretty standard stuff. And, you've got I think one of the things that people are confused about is liability. That's the part that you have to have when you go to get your license or get your registration or whatever. You have to demonstrate financial responsibility so that if you cause an accident and damage someone's property or injure someone, cause them a bodily injury or loss of wages because they can't work and all that, if you're going to have a license and drive on public streets as part of that social compact, you have to demonstrate that you have the financial responsibility to make it good if you cause an accident. Most people do that by buying a liability insurance policy, and people who are fantastically wealthy and can post a bond themselves and self-insure can do it that way. But for practical purposes, everyone gets insurance, and so now you've got, if you cause an accident, you have an insurance policy that will pay damages on your behalf to the person that you owe this money to. And what people don't understand generally is, the amount of policy. It's a question of how much policy did you buy.
Right.
The limits of liability are what we call it. Generally known as how much insurance do you have, and it's supposed to be, tied to your net worth. If you have a really bad day and you hit a kid on a bike, for example, God forbid, they're going to hire the best, most skilled attorney that they can find, as they should, and their job is to, get compensation for that injury. So if you're a high net worth individual, then you need to have a high liability insurance policy. There are some things that can't be taken from you in a civil judgment. Generally in Texas, they can't take your house, and you can't get into certain, annuities and things that are tax qualified and protected. But if you have rental properties and other assets and stocks and bonds that aren't protected, then they can be at risk in a civil suit. So it's a very simple thing to match up your liability limits to your net worth, and that's what you're supposed to do. Unfortunately, a lot of salesmen in insurance, are looking for the quick sale, and they will just quote the minimum liability, make the sale, and move on. And then people have the illusion of insurance. If you cause a big accident and then you find out that you have a total of $30,000 worth of insurance to go around, then you realize, wow, that's used up. And once the policy limit is exhausted, the insurance company is no longer involved. It's between you and the other people and their lawyers. So it's very real when it happens.
And that is pretty interesting. You mentioned, because a lot of times they say, what's your policy, et cetera, et cetera. But you're right. If you're a high net worth individual, or you're in a job, maybe it puts you more at risk than other jobs, it's important to evaluate that so you are protected on the liability side, going forward.
Absolutely. And, the higher net worth you are, then the nicer car you drive and the nicer area you live in. These are areas where, there are rings that go around perpetrating insurance fraud, and they do the what's called the swoop and squat, where they pull in front of you and cause a rear-end collision, because you're driving a nice car in a nice area. Those fraud rings pop up from time to time, and that's what happens. They cause an accident, and they're often tied in, with co-conspirators that, run up the claim value and make it a really big deal. And so, we fight against that. And that's part of it, too. The other thing that people aren't commonly aware of is that your insurance policy, separate and apart from paying damages on your behalf, also defends you. It pays the legal expenses to defend you in a claim, even maybe it's not your fault and you're being falsely accused, or the facts are in dispute. But if that can't be settled between the adjusters and it goes to a lawsuit, your auto insurance policy pays for your legal defense. And so, but again, like we talked about, it only pays for the legal defense until you've exhausted your limit of liability. If you quickly pay out the limit of liability on a small policy, then the duty to defend is also satisfied, and then you're done.
Wow, gotcha. Now, on another side of things, I have another question is, and at full disclosure, I obviously am insured with State Farm. I'm insured with you, actually. But a couple things that came on my policy was pretty interesting was, number one, the protection, what we call gap coverage, right? So the value of my vehicle versus, I guess, what it could be perceived as being worth in the type of an accident if it was to be totaled.
Yeah, there are a number of different ways that companies handle that exposure. Because an automobile is a depreciating asset, and so oftentimes if someone has bought it at a high rate of interest or didn't put any money down on it, or for whatever example, a year or 15 months into ownership of that car, it could be a total loss, and the book value of the car, the insurance pays the book value. And it may be that you owe more than the book value on the car, commonly called being upside down in the vehicle. Maybe someone might have had negative equity in a previous car and rolled that negative equity into a new car, and so right away they're upside down. So they have that exposure of having a total loss come along and having the insurance settlement not be enough to pay off the loan on the wrecked car. So sometimes it can be an add-on to the insurance policy. Sometimes that coverage GAP stands for Guaranteed Asset Protection. So GAP insurance can either be part of the insurance policy in some cases, or it can be a freestanding policy in some cases. And sometimes it's tied to the financing of the vehicle, where the financing will have an agreement saying if the vehicle is totaled, that they will, expunge the unpaid balance on the car. So it's definitely an exposure and something to look at when you're buying or financing a car, particularly if you're rolling negative equity into it up front or buying at a high interest rate.
And then let's talk a bit about this. I got obviously into a fender bender, and my car wasn't hit very, very hard, but it did sustain some damage, $3,000 to $4,000 in the rear end, etc. And then you gave me the advice to speak about what they call a diminishing value, so that I could receive additional money from the insurer. It was another big insurance company, to offset the diminishing value that I now have to report my car if I was to turn it in or sell it or trade it in or whatever, as being officially wrecked. Talk a little bit about that. Most people don't realize about that.
Sure. Well, let's set it up first by explaining that diminished value is not part of the policy when you're collecting under your own insurance policy. When you're collecting as a first party claimant on your own policy, where you have that contract in place, the auto insurance contract says we'll pay to fix your car or total it if it's wrecked, totaled. But if we're fixing your car, maybe paying a $4,000 repair bill on a car, that's it. You're not owed anything more under the contract. So there is no diminished value, and I want to make sure that our listeners understand when you're claiming under your own policy, there's no diminished value. It's not part of the deal. But when you suffer damage from the negligent driving of another party and their insurance company is paying you damages, now we have a civil situation here. You have a tort. It's the tort of, failure to control speed or failure to keep lookout. They've done a tort to you, and it's a civil matter, and they owe you damages. So they owe you to fix your car or total it for a fair value and give you a rental car while your car is not available. And if they've hurt you, all of the medical bills and damages and whatever. And when all of that is done, they also, in some jurisdictions, and most of Texas, I'm pretty sure, again, I'm not an attorney, but in most jurisdictions of Texas, there's a diminished value because let's say your car was only a year old and now it's been hit and wrecked and fixed. Well, before it had no Carfax history, had no loss history, but now it does. Now it's been repaired. And so if you have two cars sitting there side by side, identical vehicles, one that's been wrecked and repaired and the other that hasn't, well, one of them is going to be worth more than the other, and of course it's the one that has no loss history. So there's a diminished value inherent in that fact. And you can negotiate that with the insurance company that's paying you damages. They won't tell you about it, and they're not obligated to tell you about it because, again, it's an adversarial situation. We're trying to settle this claim under the legal system that we have, which is adversarial. So it's not a bad thing that they don't tell you and don't have to tell you. It's you just have to know or have a good agent on your side who will tell you about it. So once the vehicle has been repaired, then you talk to them about, hey, listen, I want to talk about diminished value. And if your car sustained serious damage and the frame was bent and it was a big deal, that's one thing. If you just had a scraped bumper and all they had to do was replace the bumper cover and it was not a big deal, there you go. If your car was new, that's something versus if it was really old, if it was high mileage versus, just rolled off the showroom floor. So it's just something that people are often overlooked because they don't know about it. And so it's good that we can kind of raise awareness about the diminished value. People will know enough to ask about it.
Absolutely. It was something I had no idea about. You gave me the advice. We were able to recover some money associated with diminished value. And I just want to say that's not only a sign. This had nothing to do. And again, at that time of you talking about this with me, I was not represented by you. So that was the great thing also. And I want people to know this is, as an insurance agent, you represent the industry absolutely phenomenally well. And I am so proud to say that you can now call me a client and that I can call you my insurance guy. That's
right. I feel the same way. And I'm glad that we touched on that diminished value for you because people leave it on the table all the time. And
absolutely.
It's there and it's fair. People, it's not like they're getting over or being a bad guy or, whatever. It's part of the deal and it's owed. Some companies, though, will make it very difficult. They want to go to official appraisal and, they'll try and make you spend $3,000 to collect $2,000 and make it very difficult. But
absolutely,
companies do negotiate in good faith and they'll say, yeah, you know what, as long as you know about it and bring it up to them, then, but it's negotiated. There's nothing in the law. There's not a handbook or a table that says you get this much. There's nothing about a percentage of the estimate being owed to you as diminished value. It's strictly a matter of, listen, what type of damage did this car sustain and how well did the repairs come out? I mean, if it was a primo job and the most trained eye in the business can't tell that this car, had some repairs done, then that's going to lower the diminished value claim. But sometimes they can't get the finish just right, and they can't get the, everything. And so sometimes it can be noticeable. And in those cases, the diminished value recovery will be a little more. So it's just a word to the wise.
Hey, I understand. Well, do me a favor. Let everybody know how we can reach you if you don't mind.
Best way is my easy phone number. We're in the north side at 281, and it's 358-4444. 281-358-4444, 24 hours a day. Someone will answer that phone.
And by the way, for all those sports nuts out there, how do you say it?
Ruth DiMaggio Berra, Lou Gehrig, Lou Gehrig, Lou Gehrig, Lou Gehrig.
That is the great Tim Oneil with State Farm. Tim, thanks a lot for being on board this morning.
Okay, pal. It's always a pleasure. Anytime.
Absolutely. You take it easy. For all those listening, you are tuned in to the Price of Business. We're taking a break. We'll be right back.